Hey guys, I'm Amon Khan and this is Solomon's Light. Today we're going to discuss something very important, but let me tell you something first. This video is so awesome it needs its own disclaimer, and here's a disclaimer. So hopefully you're back, and I bet you are, because you want to know what this video is about. Well, with an awesome disclaimer like that, there's only one thing it can be about: how the world avoids tax. Now let me tell you something, it's a lot easier than you think it might be. The only thing is there's a lot of paperwork, and I hate paperwork. But here's the thing: what happens is you have a company, I'm going to call it Amon Khan Business, so AKB. This is your trading company. It has income, so income here, and the income normally comes from trading, so sales, dividends, whatever it has. The next thing, this company will always have to pay its expenses. Now you might be thinking, are we going to do that thing where everyone just puts everything on expenses? No, we're not talking about that. That's way too simple, way too easy, and not efficient. We're going to talk about the big boy thing. You know, that thing that most people at Wall Street and Apple and Microsoft and Google are doing, but nobody's ever going to tell you that. Next, what happens? You get taxed. Then you have profit. You see? Now what they want to do, they want to get rid of this tax. The expenses, they need them to operate. They have to pay the employees, they have to get money and all that. So these two things we can't touch. This is the thing they want to get rid of. So what they do, they go to something called a tax haven. You know what? That's not a nice call. Let me do that in blue. That's important. So we're going to do that in blue because it's important. Hope that makes sense. Blue means important. I should have done everything in blue then. Okay, so tax haven. Now a tax haven is any place in the world that does not tax business or revenue or income. For example, the Cayman Islands, which is a very popular one that everyone knows about. What you then do is set up a holding company here. Now they call this AKB. Now you can call it holding or group. Now you're going to see these two examples. You don't necessarily have to call it holding or group, but you're going to find a lot of examples. If you go to a company's house in the UK or the registered office and the government sites in the US or anywhere and search for a group or holdings, you're going to see a ton of companies come up. Not all of them are doing this, but again, most of them will be. This company cannot get taxed on its profit. So the same people that own this company will own this company, and they're going to say, listen, right here, we're going to invoice you for everything you have that's taxable. So any money over the tax threshold of the company. So you know, in every region you have a threshold, and if you don't go any more than that, you don't pay tax. They're going to take every single penny after the expenses, put it into this company here. Oh, this is money, tax-free. Tax-free money. That's what they're doing, man. Okay, well that's cool. They're not paying tax on that. It's that simple. But here's the other part. They can transfer assets, right? They'll transfer assets. So if this company has, I don't know, 6 properties on its portfolio or something, then because this company can get sued and those can be taken out, they're going to transfer them over to here, assets. And if you know something about assets, you know you can't trade them off for lesser book value or market value depending on where you are. But what you can do is use this money you get from the invoice, use it to buy the assets onto this company, and then send the money right back to the company. So this company has everything. You see? It works, right? They're not getting any more money to transfer the assets. It's the exact same money they had before. And you can pay off in installments. So what that means is say the asset was worth, I don't know, 100k, and you only had 50k of capital between the two companies, well, you pay off 50k worth of assets, get that 50k back, pay off the other 50k. Oh, now you got the asset, then you get the money back. Now the company's got the 50k plus the assets of 100k. Okay, so we're getting there. This looks very interesting, and you're going to say, Ammar, is that it? Well, no, because I love you guys, I've got something even better in store for you. This is one of the single greatest things I have ever seen, and this broad market is, I don't know what's happening, they're not coming off. Anyway, so if you're still in this tax haven, which I should not have rubbed off, and this is a group, what you then do is say, I can divide the amount of money I got into 3 pots. 1, a rainy day fund. This is in case something bad and unpredictable happens. You've got like Benjamin Graham calls it a margin of error. It's basically a cushion. If you've ever been in a car crash or seen one on TV or anything, you know when the airbags inflate to prevent the death of the person. This is basically preventing the death of your companies. But if you never touch it, it's a nice retirement fund or a trust for your children. And that's a good idea, a trust for your children. The next one is something I don't really care about. We call it like disgust, It's not that I don't care about it, I love it. Don't get me wrong. This is cash flow, this is operating capital. This is everything I used to live off. And this is normal investments, right, into my businesses. That's alright, it's fun. But it's not nearly as interesting as having a rainy day cushion. And it's definitely not interesting as this one. And this one is your VC fund. Venture Capital Fund. This is basically anything you want to do with. This is the money you have to risk. This is apps. This is Silicon Valley. This is investing in stocks and shares. This is a fun part. This is the part that gets my attention. This is the one that says, wow, let's do it. Now, what can you do in here? Well, you could go with stocks and shares. You can do property. You can have bonds. See, you know in the bonds, I'm going to teach you something. I don't like having bonds in this VC fund. I have my bonds in my rainy day fund, right? Some people don't. Some people have it here, but I have it here. Why? Well, what are bonds? The government debt, the debt of the government you buy, they pay you interest on. They're fairly stable. I mean, the government's never going to die out, right? And they're very easy to sell. So easy, they're pretty much liquid. Somebody will always buy them off you at a profit because they know they can get the money back at a later date. That means this money is pretty much liquid cash. You can use it whenever. But if I wanted liquid cash, why not just put it in the bank account? Simple. Inflation. You remember when you go to the, I don't know, supermarket, and we call it Asda, Walmart, Tesco's, Evergreens, whatever, right? And 1 year your buck buys you, I don't know, 2 loaves of bread. The next year it only buys you 1. That's inflation. You buy less for the same amount of money. Your bonds are there so inflation doesn't touch your rainy day fund. So you either make a profit on these bonds or you just break even with inflation. Either way, you're not losing money. That is a really fun thing. Now, you might be saying, how do I invest in stocks and shares from a group company? Simple. If your group is a limited liability company, then legally, in most provinces and time periods, you're allowed to trade into the public stock market. If you live in a limited liability company and you own a limited liability company, and when I say live, I mean it's your company, it basically makes you money, it's everything you're living off, then you can take the revenue in that company and invest in stocks and shares. That's nice. But here's another thing. You see, I get this question a lot. all this tax haven business is freaking awesome, but I'm just starting off, and how do I not pay tax? And I'm like, I'm not going to tell you not to pay tax. I pay tax. Paying tax is a good thing. Because then the government, man, the IRS, the HMRC, they're not on your ass. Believe me, that's a good thing. But in the educational sense, there's a way. Something called co-development. What is co-development? Co-development is building your company. So it's meant to be expenses that build up your company. But what you can do is you can buy income generating assets under co-development. What happens then? What happens when you have assets that generate income under co-development? Well, you got assets that are making you money, but on paper, so this is a paper here, they go under your expenses column. So if you remember this, income, expenses, tax, right? But if all your assets are your expenses and you have no money left to be taxed, then your tax is equal to 0. That's how you do it when you don't have all that structure set up. Now there's one more thing I want to get into, and it's very slight thing. Cost. Okay? So what happens when you're paying cost? Well, what do I mean by cost? To register a company in the UK, it costs £13. For a registered office, it's about £20 to £30 per year. That is £43 per year. £43 per year. Let's say, I don't know, it's $100 in the Caymans. So $100. Well, if I add 100 and 43, I get $143. Now, people pay $143 a year so they don't have to pay tax. I don't like that, but people do it. Guys, I hope you found this video very educational. I hope this helped you understand how the world works and how people are avoiding tax every day. Guys, as always, I'm Amar. This is Salman's Light. We love you. Hit that subscribe button and we'll see you next time.